Good afternoon and welcome to BizTech Asia's Midday Market Watch. I'm Jeffery, Halley, and my guest today is Kian, the CEO of Astral Asset Management here in Singapore. Now, before we talk to Kian, we've got a lot to get through. Let's just have a look at stock markets around Asia today. Bit of a mixed bag. The Nikkei 225 is down 0.86%. Shanghai is up 0.19%. Hong Kong is sharply rebounding today, up 1.34%. Down in Australia, the S&P ASX 200 down 1.22%. South Korea's Kospi is up 1.46%. And in Singapore, we're down just 0.2%, with Kuala Lumpur almost unchanged. So, Kian, what do you make of that? A very mixed day today in Asian markets.
Yep, it's a mixed bag. And for Australian market, I think it's just a mild reversion, given that they've hit an all-time high, this week. As for the other markets, I think they are reacting to what the Fed Chair, Jerome Powell, have said last evening.
Right, we can't really have this conversation today on the 1st of February without actually talking about the Federal Reserve rate decision overnight. Could you walk us through what the Fed decision was and some of the highlights?
I think without any surprise, there wasn't any rate reduction or cuts announced last evening. I think the market has sort of anticipated that. But what is more interesting that was announced by Fed Chair Jerome Powell was that, and he said it rather straightforward, is there's no rate cuts expected for the coming March meeting too. I think this has sort of taken the market, as a surprise, because the market has actually priced in, a certain percentage that there might be one coming up in March. And I think he has flatly rejected that notion.
Yeah, absolutely. I think the futures were showing just a month ago a 90% chance of a Fed rate cut at the end of March or in March. I guess you just can't keep the optimism in the markets down. And it's also the press conference itself is often what causes the volatility. But I see that we saw Wall Street reacted rather unfavorably to his comments overnight.
That's correct, because the markets have sort of anticipated 6 rate cuts for 2024. And a lot of our previous discussion, we think this is over-optimistic. And with no rate cut anticipated for March, and with his rather straightforward message that, he really needs to look at the data, in the coming months before deciding on any rate cuts, I think, it basically sort of, dampens the market spirit of, expecting a 6 rate cuts of 1 to 1.5%.
Yeah, very much so. Well, having moved past the Fed, which I guess was the highlight of the week for most market participants, we have seen some data out of China this morning. The Kaizen manufacturing PMI rose to 50.8, a slight outperformance and definitely better than the contractionary official data from earlier this week. Is this green shoots for China, or is this just another false dawn?
I think the data just showed that there's slight improvement, but overall, I think economies in the region have been rather pessimistic, and everybody also has adopted a wait and see attitude. The rationale is simple. January is usually a hard month to gauge, given that, with Chinese New Year's and with a lot of, goods being made for the festive seasons. And then February is, everybody has gone quiet in particular in China because of the long breaks. So, one swallow doesn't make a summer. I think economies and even the markets would want to see more data, more positive data coming out in the following months before really, concluding that the economy is on its path of recovery.
It's sort of the opposite question with regards to the United States, where the data has been excellent, and it's when the Fed will be cutting and not if.
Sorry. Yeah, it's an interesting situation where it's a tale of two cities, where if the economic data is very strong, as we have seen in the fourth quarter of 2023 for United States, as well as in the expected first quarter, the Fed has limited room in terms of cutting rates, right? Because if they proceed with a rapid rate cut, it might just fuel the whole economy recovery as well as bring along the next wave of inflation.
A decision that the Bank of England will probably have to make along the same lines this afternoon. But for the rest of the week now, Kian, soon, what sort of data should we be looking for?
I think the US non-farm payroll is always an important indicator because it gives you an overall picture of the employment situation in the United States. And, given what we've seen in previous months as well as the, anticipated number, I think the numbers will come out fine, which again reinforce the notion that, US economy is doing well, not only on the economic data side, but even on the employment side is performing well. So again, I think the Fed chair has a lot of items that he needs to juggle with, to come to decisions when it's a good time to cut rates, given that economy is good, all right, employment is strong, and at the same time, inflation is coming down to a 3% level. I think the moment where he decides to pull the trigger is most likely going to be second half rather than first half. Right.
Thanks, sir, so much for speaking to us today, Kian Soon. It's always a pleasure. We've been speaking to Lee Soon, CEO of Astral Asset Management in Singapore, on BizTech Asia's Midday Market Watch. I'm Jeffery Halley, and this show will be on our website, www.biztech.asia, as well as our social media platforms. It will also be available with our syndication partners, TV stations, radio stations, and websites. Thanks very much for tuning in.